The money question is given QT, quantitative tightening. You can't tell me we're going to have stability when the ECB unravels that 7 times factor. It's illogical.
Yeah, because today the total outstanding amount of bonds that are trading at negative interest rates, which is mainly really European government bonds, is 8 trillion out of a total global bond market of 50 trillion. That means roughly 20% of interest rates are negative. So that means that if that 8 trillion starts to turn around and become positive, that means that the ECB event we're having potentially already on Thursday, but later on down the road when they continue to tighten, is very, very significant.
Torsten, let me bring you over to my ECB bond buying chart. Now, this is not dissimilar to what Tom was showing, but actually it's an ECB debt duration chart, and you can see the difference. This is basically a weighting average of the remaining maturity. Germany is around 6.8, and this is the kind of the rest at total 7.82. Why is the lack of German bonds actually impacting ECB thinking?
So, of course, a significant issue, as you allude to, has been what has been the composition of the purchases. And there's been a lot of discussions about will the capital key change? Will we do this differently going forward? How long time can this continue? And most critically, will the ECB run out of bonds to buy? So in some sense, what your chart also illustrates is that there's a natural end to how long time the ECB can continue with this pretty big bazooka that they're taking out as we speak. And that's also why once this comes to an end, the big question is, will markets just shrug their shoulders and say, okay, whatever, this is going to end, and we'll just start slowly pushing rates higher? Or is there a risk that we have been now in a regime for 6-7 years where interest rates have been zero and negative, both in the US and in the euro area, and investors will suddenly wake up and say, wow, gee, maybe we're actually about to get high interest rates, and maybe we'll not have all these negative interest rates in the euro area forever. And that becomes a very significant issue for investors, including here again on Thursday.
Yeah, so which way do you think it'll go, Torsten?
Yeah, so we are going into Thursday with a big expectation that something, of course, will be signaled about ECB tapering. As you know, the details here are that at the moment the ECB is buying every month, and of course the amount that they're buying has to be lowered, and that amount that they'll go down to is less important compared to will there be an end date. Are they going to say we'll buy for 9 months, 25 billion, or are they going to keep it open so that we don't have an end date? And that discussion becomes quite critical, because as long as if you certainly have an end date, then investors, of course, can begin to say, well, on that date, there will no longer be purchases of Italian government bonds, there will no longer be purchases of periphery government bonds, and then the fear is, of course, that you'll see the spreads on the periphery start to come out.